Thank you for coming this morning. I won't talk much about CBRE. In fact, I won't say anything about CBRE. I'll just talk about the most dynamic and most profitable of all the sectors, which is our retail sector. Obviously, assuming that you get a good tenant mix and the tenants are paying the rental, it's a good sector. This is a picture of Royal City from the top of one of the buildings, but it's just an artist's impression, I think. Royal City just opened up in HANOI. It's about 240,000 square meters. It's all underground, on 2 levels underground. I don't think there's a bigger one in a basement anywhere in Asia. There's about 4,000 apartments. I think half of them have already been handed over, and it's in Midtown HANOI. It probably gets about sort of 80,000 motorbikes going through there on a weekend day. So we're talking about some major footfall in projects like that. Yeah, I will run you through just about 20 minutes before I hand over to Mr. Tan. Look at the economic overview. Basically, what the market is telling us, and a few personal comments as well. In retail real estate, the actual market is out. We'll focus on Ho Chi Minh City, but we'll look quickly at HANOI as well. And the consumer trends very briefly. Ralph from TNS was good enough to give me some slides, and then we'll just finish off with a bit of a look into the future. Okay. This is the economic overview slider page that just gives you a picture of what Wingway look like and what it looks like today. The recent headlines in the press. Oh, that one's a bit slow. Yeah, got it. The recent headlines in the press. The press love retail, always writing good things, but they're always sending quite a lot of mixed messages, making it difficult for developers and retailers to really know what to do with their retail space or really what's going on in the market. I've highlighted in green some of those messages. Some of them are very positive, some of them are quite negative, some of them about all the new retailers coming in, some about all the retailers closing down, centres closing down. And we get a lot of stuff in the press about foreign retailers coming in, many of which are already here, but your competitors coming into the market as well. Even though it's probably been a year since we last spoke, there hasn't been a huge shift in the market, but we've just seen in the last quarter that these economic indicators are starting to line up and point in the right direction in probably most instances. So there is a tendency for confidence that is slowly coming back into the market, and that's obviously something we all want to see. And if we start feeling a bit more confident, we'll start spending a bit more money. Certainly, we need the consumers to be doing that. International tourist arrivals and retail sales and services. Those are the ones we'll touch on quickly because we've seen some growth in both those areas, and that rewards us with increase in spending as well. The last 10 years of turnover in retail sales and services has been a average growth of 23%. So that's pretty good across the 10 years. But since that 2008 period, we've probably seen that growth slow quite a lot. Since those days of high inflation and the real estate market was doing particularly well, then it's just kind of tapered off. But still, the retail sales and services growth is still pretty strong. Obviously, off a pretty low base. Also, in terms of tourism. Okay, in terms of tourism has also grown, and we're on about 6.8 million visitors. These are international visitors coming to Vietnam in 2012, and we still see sort of 12%, 13% year-on-year growth in tourism, and that probably put in about 5.6 billion US into Hanoi and Ho Chi Minh City just from tourism in 2011. 2012 figure is not indicated there. Okay, so it indicates that compared to Thailand, with 22 million tourists and that much 30 billion being spent, is that not as many people are not spending as much in Vietnam. But obviously, as more tourists come in, we hope to see that some change there. Okay, this slide we'll just go have a quick look at the retail space that's is under construction in the future is highlighted in these green little tops. So the top one is Ho Chi Minh City, where we've got a population of about 7.5 million, and the bottom one is Hanoi, where we've got a population of 7.5 million. And Hanoi is outstripping Ho Chi Minh City in terms of shopping centre development. So if we look at 2013, I think we've got 433,000 square meters in Ho Chi Minh City, and in 2030, by the end of this year, we'll have 1 million square meters in Hanoi. So there's double the amount of shopping centre space in Hanoi than there is in Ho Chi Minh City, and by the end of 2014, there'll be 3 times as much shopping centre space in Hanoi than there is in Ho Chi Minh City, and by the end of 2015, and it goes on and it goes on and it goes on. So we're in danger of Hanoi being the shopping paradise or the Bangkok of Vietnam, and you thought it was all happening in Ho Chi Minh City. Okay, just move on quickly to Ho Chi Minh City and some of these indicators. We kind of focus ourselves on this shopping centre here. Although I mentioned that 433,000 square meters, we just look at this this column down here where we've actually got formal retail, much of it standalone, and 250,000 square meters with a vacancy rate of just under 14%, and that's gone up. That vacancy rate has gone up, and we'll cover that why in a couple of minutes. Average rents in the city centre, about $95 a square metre. You can put that down to a couple of projects that charge rather relatively high rentals, like the Vinh Group project, Vinh Com B. But in the decentralised areas, those rents are much lower, $26 a square metre on average. Department stores in the decentralised areas are a little bit higher. The consumer, we've still got 240,000 square meters. It's just a fraction of what you would expect compared to our regional neighbours, particularly on a square meter per capita basis. It's just a fraction, a very small market. The consumers here are still tending to buy in the informal sector or still tending to buy on the street shops. So probably as much as 70 or 80% is still going into the market, into the informal sector. Just look at why that vacancy increased. Basically 2 reasons. The limited foot traffic in the non-CBD locations increases vacancy, and the high rental rates in the CBD locations has increased the vacancy. Okay. We haven't had a lot of new stock come in recently, and in fact some of that stock or some of the tenants have just given up their space, and that stock hasn't been re-let. In terms of performance, some of the shopping centres still performing reasonably successfully, and I think that we can point out sort of Diamond Plaza, Saigon Tourist, BFT, Parks and Vung Vung, still showing good foot traffic, not a lot of vacancy, and performing well in terms of revenues. One thing we did notice is that the bazaars, like the Saigon squares, these kind of markets, have started to show vacancies for the first time. The rental rates have gone a bit high, and they've stayed high, and tenants are starting to move out of there. So not doing as well as they were. F&B particularly, and convenience stores to a certain extent, are dominating the market, particularly in the high streets. We'll expect some new brands to come into the market quite soon, particularly with the announcement of McDonald's starting off in High Street 1. And we see some changes where some of the retail space, particularly the fashion space, has been changed into F&B space, where the F&B is much more in demand. In fact, a few years ago, it was maybe 5 years ago, the fashion rents were double the F&B rents. Now we really struggle to find the fashion retailers who can afford those rents, so it's actually switched. The F&B rentals are higher than the fashion rentals. Obviously, it costs a bit more to fit out an F&B shop than it normally does for a fashion shop, and that's for the developer and for the retail, so they wouldn't want to pay too high rentals. In the CBD, rents have decreased slightly or they've stabilized. And they don't get relet at a lower rate in the CBD. The landlord will rather wait for the new tenant to come along or the market to pick up. There may be a case when the non-CBD, particularly, where when the shop becomes empty, they'll redesign it or they'll offer a prospective tenant a turnover share, long rent-free periods. So landlords are shifted, not necessarily just fixed rents, but they can offer all sorts of incentives. And turnover share seems to be one of those new methods to entice tenants into a building and share the upside, and obviously they have to share the downside as well. In terms of Ho Chi Minh City and its floor and its what it's looking like, obviously it's just really spreading out. We've got a bunch of new shopping centres coming up in the future, very few of them in the centralised location, so we just see that the shopping centres spread into new districts such as the Aeon Mall, the Vivo City, this District 2, Pandora, and doing rather well in those some of those decentralised areas. Just have a quick look at some of the new projects that are coming up, so you can compare. Times Square, quite small retail area, but instead of showing off the Gucci's and the luxury that we first thought there was going to be in, they shifted into a sort of a luxury furniture and a real category killer in terms of luxury furniture. Saigon 2, which will bring in eventually in 2015 the Takashimai department store to 15,000 square meters of their overall new net leasable area, right in the heart of District 1. And in District 2, with Tao Dien Pearl, not sure the anchor tenant yet, but we've got 16,000 square meters that will most likely be attached to that Tao Dien railway line. MRT, whatever it's going to be called in the future, metro line in the future. And coming up is another park zone and in District 2 as well, with 24,000 square meters next year in District 2 at Canterville. SC Vivo City, this is the one that obviously everybody's waiting for. We expect to repeat of the Vivo City in Singapore with a whopping 40,000 square meters in District 7, and the anchor tenant there will be the Co-op Extra. And smaller one, Podium, also just on the outskirts of District 1 is the Lim Tower 2, that's currently under construction. And I know we've got some folks here from Aeon with the Celadon Shopping Centre out there in Tan Phu District. So Aeon will change a lot of the landscape of Vietnam retailing from what we have at the moment, just because of this huge big box retail and Aeon bringing their own hypermarket to the market, and hopefully a lot of new tenants, perhaps from Japan, perhaps from the region that we haven't seen before, with 2 Aeon malls in the south and one in the north, with Aeon malls also coming into Cambodia. So a massive thrust from Aeon into Vietnam. And Tokyo Mechamex in Bigyung, this is the largest of their retail components. They have got some smaller retail components coming before this, but probably 2015, 2016, a very large shopping centre at the back of their Summer Gardens development of about 100,000 square meters. We're lucky in Vietnam in that doing business is not just doing business in one city. We can do business in 2 cities. We can do business in Hanoi as well. I mentioned before that the shopping centre space there is probably double what we've got here, and a vacancy rate of about 11%. Rentals a little bit lower, $90 per square metre in the CBD, very short of space in the CBD, and rentals in the non-CBD a little bit higher at $38 a square metre. The main issue there was the opening of Law City, and that added this 164,000 net leasable to the market. So massive amount of new supply that came into Law City. One that did close down was Pico, which will be transformed into a Lotte Mart in the future. Some big players in the market. These are really dominated by market at the moment, really dominated by Vin Group with their Law City and Times City, and they've anchored with Ocean Mart, and then Co-op Mart, moving a couple of stores up to Hanoi already, also and sharing, paying with Fair Price, and then Lotte Mart, obviously on expansion trail. Not to mention Big C, also on expansion trail. Okay. Average rent declined while occupancy strengthened. We won't go into too much detail of Hanoi, but I just wanted to mention this slide and point out that we've had a lot of tenants moving around. So I mentioned that food and beverage is in high demand, but we had 519 stores open in Hanoi in the last quarter, and 220 stores closed down. Law City is about 500 shops, so you can imagine that most of that number is Royal City. But in fact, the 220 that closed down just shifted from where they were, existing shopping centres, existing department stores, existing shop houses, and went into Royal City. So there is a tendency for the tenants to move around to new projects. When they get, they realise that their existing project is maybe not as competitive or as favourable as the new one, they just pack up and move. So there's a lot of opening and closing. And I think you can see there that a lot of those shops opened was in the F&B sector. 33% of the shops that opened were F&B. And then 36% of the shops that closed were fashion. So fashion obviously hadn't performed so well. But at least in Hanoi, with all that new space, a lot of new space, the rents have started to dip. And particularly you see with the electronics guys is that they're taking new space now, even though this is not the best time for consumer spending. They're taking the space now because the space is cheap, and they obviously are getting ready for establishing themselves for the future. They obviously have a lot of competitors as well in that electronics business. When it comes to consumers, we'll deal with the healthcare and F&B issue and the education a little bit later in the presentation. Okay, so not a big change in Hanoi. Also, things just shifting out a little bit. Not much activity in the city centre. We have some new projects coming up there. A lot of new projects. Another underground mall. I've been into this underground mall. It's supposedly the whole mall 230,000 square meters, but they're only going to use 90,000 square meters underground. That opens on the 24th of December, and we'll have an aquarium, as well as lots of other entertainment in there. State-owned is the Big Glacier guys. They've got a large residential development in the west, and they will put a shopping centre in there as well. Another big one for next year is I think the first Lotte department store opens mid next year in Hanoi with 35,000 square meters of a Lotte department store. There'll be a Lotte hotel and office component, service department component as well. And this is military, another one in Long Bien district, which is over the river to the east of the city. And then, as I mentioned, the expansions of these Aeon malls, also in the Long Bien district, a new developing area away from the city. And then the big one to the northwest 200,000 square meters of superstructure mall. Some of the retail, like in Ho Chi Minh City, has come to a standstill. Construction just stopped, but that's more likely to be with a lack of residential sales in the development rather than the retail itself, which may have suffered. Just a little bit about the consumer, and I mentioned that Ralph from TNS lent me a couple of slides. He just is basically saying that consumer confidence index has dropped a massive 12 points in just 6 months, and that's driven by consumer fear. And the consumers are just not confident in the economy, and they just haven't been spending. But they kind of shifted the spending somewhat to F&B. Probably see here where there has been an increase in spending has been on F&B, and there's particularly on the franchising. If you see this big number here, F&B 27% up. Healthcare, they've been spending, and education, they've been spending. So these sectors, always mobile phones, that never changes. These sectors are always, these sectors are the ones where they're getting the attention of the consumer at the moment. The ones that have really suffered is going out in the evening, and that's the dining out, not F&B, fast food. There's dining out and entertainment has suffered. People spending less on those particular items. People generally not happy with the value of things. That's the biggest issue, is that the confidence has dropped because the value is just not there anymore. And that value comes through in terms of value growth. They feel that they're not getting value for money. They feel that the prices have gone up and they're not spending as much. So all these three indices have gone down. People buying less, using less, conserving more and saving more. So that's really affected us, and there's a real lack of confidence in the market. Obviously, Vietnam is not just Hanoi and Ho Chi Minh City, but we look at the whole country, and we know that incomes have gone up from 2006. They've gone up every year. Urban and rural has continued to climb. Incomes have continued to climb. But the pace of their growth has actually started to slow. So because of this slowdown, obviously it's affected retail in quite a big way, but there has been continued growth in sales and services. Okay. We'll just finish off before I hand you over to Mr. Tan, is that foreign retailers and foreign developers, particularly those invested in shopping centres, are very, very confident in the long term of Vietnam and are starting to show signs of movement. That may be helped by a warming up of government to investment, foreign investment, the increase in population, the fact that they see this as just a short-term blip, and that long-term for retail with this 90 million people that we have is going to pay dividends eventually. So I think that's been reinforced by the likes of Starbucks and Burger King, some high-profile stuff, maybe the movement of Ocean into the market, but some big names certainly coming out and talking about movements into Vietnam. Maybe the softening of the economic needs test and making it easier for licensing of retailers for their second and third and fourth stores without having to go through those tests in specific retail locations. Will help as well. Okay, just in conclusion, sure, the high streets are still dominating the market, and that's where the foreign brands are most likely to go first before they're moving to shopping centres. And one of the key messages here, and one of the obvious things that's come about is Hanoi versus Ho Chi Minh City, difference in supply. Massive supply in Hanoi compared to that of Ho Chi Minh City. But it's not about the quantity. It's not going to help us having 2 million square meters in Hanoi if it's not going to attract international retailers or retailers at all. So we need to be much more focused on the quality of this space than the quantity if we are going to get this space leased up. And that involves tenant planning, researching consumer, understanding target tenants, management. And so on that point, because we really focus on the quality now, I'm going to hand you over to Mr. Tan, who is the Director of International Council of Shopping Centres, which is a body and a global body that takes care of our shopping centre industry.